Hey, what's up everybody? Tuesday, January 21st. I did send out my new issue of MMT Trader. If you want to get that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. I put the link right here below. All right, first of all, a little market talk. I'm bearish on the stock market. I think there's going to be a correction. I gave a number of reasons why. I've been giving a number of reasons why. That's all in the report today. If you want to read about it, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Here's what I want to talk about in this video. It has to do with the reasons I feel that it is really biologically, I won't say impossible, but very close to impossible to be a short-term trader. Now, I know some people do it. Myself, I used to be a floor trader on 4 different exchanges. You know, I had some degree of success doing that, but it goes to human biology. I spoke about some of this, or I alluded to some of this in my prior videos, the past few videos I did when I talked about, you know, how the brain interacts with your body's physiology during times of stress that would cause decision making to be, you know, very suspect. And there's not a whole lot you can do about it, because that is just the way we are built as human beings. You know, your body or you receive a threat or stress, parts of your brain react to it. There's an instantaneous reaction, that fight or flight reaction. Then if the stress is maintained, there is a prolonged reaction, and that prolonged reaction tends to interfere with what I would call good decision making. And this is the problem with short-term trading, and it's really biological. And I know a lot of you, especially if you are novice traders, you are in search of some system or some way that is going to reward you with big short-term profits. And maybe there is something like that out there, but I will tell you that very few of you would be able to successfully utilize that system because of the biological effects on your body that would cause you to self-sabotage or veer away from the system, not, you know, just that stress factor. All right? The problem comes with when you're talking about short-term trading is that, first of all, you need an enormous amount of decision making. Right? You're in, you're out, you're buying, you're selling, the market's moving, you're trying to see patterns in what is basically random movement. I mean, when you're talking about short-term market movements, most of it is random. I mean, over the long term, the markets are going to react to the economic fundamentals, to basic economic conditions. I think everybody can agree on that. But in the short term, and I'm not just talking about 5 minutes or an hour, you know, the short term could be days, it could be weeks, it could be months. There's so much noise in the movement, there's so much randomness. And the problem is, when you have these positions on, you are in a constant state of stress. All right? The market will be moving in your direction, then for a while it won't be moving in your direction, or maybe it won't be moving at all, so the stress comes from not having a position on and wanting to do something, right? That need for that instant gratification. And your body physiologically is reacting to this. When you're in a threatening situation, you get the fight or flight response. I've spoken about that in the last 2 videos, how your brain reacts. The first instance is that, you know, you get an adrenaline gets pumping up, your muscles tighten up, your breathing rate goes up, your heart rate goes up, everything, your metabolism speeds up. Now, normally in a real threat situation, that would subside once the threat goes away. The problem with short-term trading is that you are constantly faced with that threat or that stress. Let's call it the stress. I mean, every single day, hours of the day, a lot of you sit by your screens, you're looking at the market and you're thinking that you're trying to isolate patterns in those price movements when really it's all noise. All right, so you're on a quest to achieve something that is really unattainable. And the normal person's physiological reaction to that is that your body is going to try to fight off that stress with the mechanisms that it has. All right, it might be higher blood pressure, the adrenaline rush, all those things I've spoken about. If it's a prolonged stress, then you have the release of cortisol. You're in that heightened state all the time. It starts to affect your decision making, and when it affects your decision making, then whatever system you are following, you're going to end up self-sabotaging yourself. You're going to veer away from the system. You're going to try to make changes on the fly to the system. It's just not going to work. You're going to blow the whole thing up. The way to do it, and a classic example is you look at a guy like Warren Buffett, right, who has accumulated this massive wealth over many, many years investing in stocks, really stocks that are not, we're not talking about buying Amazon when it was $1.50 a share or Apple when it was $3 a share. We're talking about, he bought Coca-Cola, he buys all these kind of boring stocks, and he's accumulated this massive fortune over the years. The guy doesn't own a trading screen. You can't, I mean, there's no way he sits there in front of his in front of a trading screen all day long and stares at the market. So the secret is, what is the secret? What am I trying to say? I've already said that short-term trading is nearly impossible biologically speaking. Maybe some people have a level of resilience against stress that is at a level much higher than most people. But more than likely, you do not fall into that category. So the answer is to remove yourself from that stress. How do you remove yourself from that stress? You take a longer term approach. You don't look at the market because it's not necessary to look at the market all day long or even day to day, or for that matter, sometimes weeks at a time, because that's just noise. Looking at it injects, stress, causes you to make decisions, sometimes against what you're trying to do, or which leads to an outcome against what you are trying to do. So the way to succeed is to be in tune with your own human biology. That means to lengthen the time frame, to remove yourself from the noise and the stress-inducing elements of this activity, trading. You got to cut down the size of your positions. I know a lot of you, it gets back again to this whole mental game and this neediness. A lot of people don't want to cut down the size of their positions. Why? Because they want that money right away. They want big money right away. That's gambling. Warren Buffett started out with like 100 grand. He's worth what, 80 billion, 100 billion? I don't know how much he is, but it's like a crazy number. But it happened over a long period of time. It's like a growth function. It starts out very, very slow, but then it starts to build and build. It grows exponential. So the way to do it is to manage your funds properly. Never overcommit. Take a longer term horizon, a longer term approach. Don't look at the market all the time. Go away from this need to have instant gratification and quick profits and short-term trading. That's the way it'll happen for you, because then you become 100% in tune with your own human biology. Why is trading so hard? It's so hard because it runs counter to our biology. When you align yourself with your biology, with what you are trying to do in the market, with your own human biology, you will succeed. It is an absolute guarantee that you will succeed. But that's the key. That is the answer. I know a lot of you won't agree with me on this. You'll think it's crazy. You'll say, I know a guy who's short-term. Yeah, there are people who, look, and by the way, just as an example, I remember when I was a floor trader, some of the most successful guys, and we're talking about the floor when, you're buying and selling every second, right? I'm long, I'm short, but the most successful guys, even though they were on the floor, they were long-term traders in the sense that they had a view of the market. And basically they were on one side of the market all the time because they had a view. So they really, although they were down on the floor and they were pit traders, they really had that long-term approach. And that's why they became so successful. I only learned that much later on in my career. I'm trying to pass that information along to you guys. And I hope you listen to it. All right, see everybody. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Bye.